So to talk to me, normally I would say use Discord. I'm actually going to make sure Discord is also available for me to see. Just use the live voice chat, or you can use voice itself. Here we are. So hey, this is my Ajax shirt, which is the Amsterdam Soccer Club. So I figured it was fitting, considering we'll be talking about the Dutch market today. And so thanks for joining. First of all, I'm still trying to kind of fiddle with where I put the chat on my two screens. There we are. So I'll be talking about Tencent, or about Prosus, which is not just Tencent, but a big part of it is. And Prosus is my number one pick on the Dutch markets for 2021. And that has a couple reasons that we'll be diving into today. And that has to do with their financials, but it also has to do with how they're positioned. And if you know me, if you've talked to me before in the Discord, you know that I am fairly cautious when it comes to investing in China directly, or in countries where I don't speak the language. Prosus is an excellent way for me to be exposed to those emerging markets without exposing myself to a lot of the risks that you have by directly investing in stock there. So without further ado, I will be jumping in. I'm also going to let them know stream has started. There we go. So let's start with what the heck is Prosus. So if you haven't heard of Prosus before, it's a global consumer internet group that invests in companies within social networking, games, e-commerce, so food delivery, e-tail, classifieds, which are online advertisements, payments, fintech, travel. So when I start saying this, you start to that's where Joker comes in, right? So all of these things are sectors that I'm a pretty active investor in, and I think that Prosus has made some excellent investments for the future there. So they cater to more than 1.5 billion people in 89 markets, of which they're the market leader in 77. And their key holding is 31% in Tencent. So let's take a quick look at the structure that I just explained. Prosus is part of Naspers, which has two branches, e-commerce and social and internet. Social and internet is where you find Tencent with gaming, with social media, with advertising. And then we have e-commerce, not the least of which is some big names in food delivery that we'll be discussing soon. They have been making very big jumps to investing in food delivery services in India, in China, in emerging markets like Brazil. And they've done some excellent cheap investments in the past few years that are starting to pay off pretty handsomely. So let's discuss the investment case. Also, why the heck are you doing this? Thank you. There we go. Let's discuss the investment case for Prosus. They offer exposure to market-leading internet assets, which are benefiting right now just because of the trends of the markets, but also because of COVID-19. Think about games. 46% of Tencent is games. Online food delivery. It's also geared towards the recovery, which is interesting. So it's benefiting a lot from the current trends and from COVID itself. Because it's in those markets that are impervious to COVID or even benefiting from COVID, home delivery of food, games, but they're also in markets that benefit from the cyclical recovery through online advertisement, payments, fintech, classifieds. So it's a stock that will benefit from both sides. I think it's benefiting from COVID more now than it will from the recovery, but it will benefit on both ends, which is one of the reasons why I think Prosus is such an interesting investment right now. It's fairly defensive because of that too. If the recovery happens sooner than expected, that's fine. Prosus will benefit, and if it gets delayed, if the recovery is only happening middle or late 2022, Prosus is an even better choice. So the fast-growing sectors that Prosus has decided to take their stake in, it can be found in countries like Brazil, countries like India. Just Eat Takeaway is one of the competitors, which Prosus has a stake in. Delivery Hero and iFood, which is one of my personal favorites, which is mostly in Latin America. And the interesting thing of what they do, and I call this, as you see between the brackets there, the pasta and steak method of investing, is Prosus has a profitable investment in Tencent right now. That's making them a lot of money. However, what they're doing is they're investing in growing markets, which are currently losing them money, right? Those are not profitable investments yet. That's a very clear route towards profitability that they're on, which I'll show you in the financials in just a second. And so what this is those. So while they're investing in companies like Tencent and all these growing companies, I say that they're eating pasta, right? Because they're eating something cheap. It's good for you. You can get a lot of it. But once they start to pay off, right? Once these investments start to go from being at a loss to being at a profit, that's when they'll start eating steak. Because at that point they've covered all their debt, and at that point they're just assets that are making them money. So one thing that makes me very bullish on Prosus is the technological market trends that they're following. One of the most important market trends that we're looking at is advertising revenue that goes from TV to internet. That has surpassed TV around 2016, which is also well after Prosus started their investment in internet advertising. Retail shopping all went online, especially in 2020. Global music became digital instead of physical. Mobile phones, technology in consumer spending. So thinking about consoles, thinking about televisions, about computer hardware, laptops, etc., smartphones. And finally, where people spend their time. And time spent on TV was still pretty high in 2016, 2017, and I don't think that's going to change, but a lot more time is being spent on the internet right now, which is where Prosus has such a strong presence, which is where their advertising is focused, and which is where their current investments are focused, where their gaming is also focused. So I think all these internet investments are investments I want to make, but because I don't have the time to look at all these companies individually, and because I don't have the time to familiarize myself with the local languages in these emerging markets, Prosus for me is the number one pick to get this exposure. And in that sense, it's an offensive investment because I'm getting exposure to all these emerging markets, which is inherently risky, but doing it via the Dutch markets, via a route like Prosus, allows me to mitigate a lot of those risks, getting a lot of the upside without a lot of the downside. So a couple investor activities that I think warrant our attention before we jump into the financials. Prosus has announced a $5 billion share buyback. That's because right now in the technology area, the companies are very expensive, right? Doing investments is quite expensive. And I think that's one of the mistakes that was made in the mining business in 2010. Business was booming and they all started buying companies, even though they were selling at a premium. When the gravy train stopped, a lot of these mines were stuck with assets that weren't that profitable, and that really hurt the industry. It's one of the things I was worried about with Prosus. They made a couple really good investments now, and I was worried that they would overextend, that they would buy too many of these companies and start to overextend, start to lose control, and more importantly, if tech does take a downturn, I don't want them to be in a position where they are exposed to their debt. And instead of doing that, they very positively surprised me. And if you look at my investment strategy, right, when I've posted that in the Discord, one thing that's very important to me is that a company takes a very investor-friendly position. And that's what Prosus is doing with this $5 billion share buyback. That's going to reflect itself in the share price, and I'm very much looking forward to that. The next thing is the analyst attention. Right now, there isn't a lot of analyst attention despite it trading on the Amsterdam exchange. It moved from South Africa to Amsterdam. Not a lot of banks are looking into them, and only recently we started seeing analysts from ING and KBC do an analysis of Prosus. And the more analyst attention it's going to get, and the more Goldman Sachs and big banks start to put their analysts to looking at Prosus as well, the more attention from retailers it's going to get and from middle to large investors. So the price target made by ING and KBC is 120 euros average. I think it was 115 with ING and 125 with KBC, which is in line with my normalized case. So if it does reach 120, which I had for March this year, if it does reach 120 somewhere this year, then that's well in line with my normalized case of investment for them. Right now, Prosus trades, I say this by heart, around 96, 97 euros. So a little bit of the context you want to know when you're looking at these fundamentals of this company. We're looking at the investor activities, the extra analysts, the portfolio that they have already that's profitable. But then we're also looking at the wind that they're going to catch in the back from their excellent investments in the growing markets that we know are growing. Like, we have the numbers now. They made good investments. We're seeing all these numbers cross over very important thresholds, which means that their investments are going to be paying off. And even now, it might be that one of their investments gets beaten out by a competitor. That's totally possible. But because they made so many nice diversified investments in these emerging markets, I think it's positioned itself to be one of the best performing stocks on the Amsterdam Stock Exchange for 2021. Jumping into some financial analysis. Before I do that, I would like to take a moment to look at some potential questions. We just discussed a lot of fundamental information in a short period of time. So if you want, you can type in the live voice chat 1 or request permission to speak, and I'll make sure to unmute you, or in the Twitch chat, whichever you prefer. And if there's no questions, I'll just move on. Also, for free, the Poggers Prosus up in the chat. Hashtag Poggers. Oh, no, wait, we're not doing Poggers anymore because he's evil. I forgot. They even removed the emoticon. All right. Ooh, question. Yes. Where can you trade Prosus? I know iBroker has it. If you're in the Netherlands, De Giro, Links both trade it. I'm not sure if Ameritrade offers Prosus. But yeah, look into whichever brokers in your area offer international exchanges, and those should offer you Prosus. I know most Canadian ones have Prosus available. So as long as you have access to the Amsterdam Stock Exchange, getting access to Prosus should be easy enough. So all of the numbers you'll be seeing here are in millions, and these are from my personal estimates that I combined with analyst estimates. And so the last time I updated this was in March 2020, and now recently I've started updating these numbers. So most of them are updated, not all of them, but things are still very much in line, so it should give you a very close idea of what we're looking at. So the first column in every case is going to be 2018, then 2019, 2020, 21, and 22. Goldfish is crying. Why are you crying? Ooh, yeah, that's good advice. I'll just move my camera further to the corner. Let's see. How do I? You know what? I'm just going to turn off my camera for a bit. How about that? There we go. Cool. Good advice on the camera. I didn't even realize. Cool. So right now we're looking at the income statement of Prosus in millions. So if we're looking at sales, we can see that sales are steadily growing, and that I've projected these sales to keep growing through 21 and to 22. EBITDA is looking very healthy, which, these things are what I'm looking for here is I'm looking for growth. I'm not really looking for magical numbers. I'm looking for growth. I'm looking for growth in the net income, and I'm looking for assets that are safely positioned. So if we're looking at the most important one, which is sales, we're seeing a very healthy, steady growth, and that's the most important takeaway here. You can see that their depreciation is creeping up as well, but that's fine. If you're depreciating assets, that means usually you can also write that off on your taxes, which is not a bad thing. I'll be talking about taxes as one of the last thing. There's a nice, interesting anomaly there, but we'll get to that in a bit. So, my meat and potatoes, the cash flow statement. I'm not going to teach you how to do a cash flow analysis here today. I want to do a separate stream just for that. We're looking at a stock today. So this is the key cash flow data. So as you can probably spot, this is not the full cash flow statement. This is the key data that are important to me personally that I look at every time I look at my analysis and I update it. These are the numbers I want to know. And the way I project these out is I take the numbers and I literally guesstimate, right? I calculate historical performance. I calculate, are they doing better or worse? Have they given any guidance? What are their investments doing? How are they positioning themselves? And I give it a guesstimate to the best of my abilities. And sometimes those are pretty far off from analysts, and sometimes I'm right, sometimes I'm wrong. You don't have to get every number perfect for this to be good. Projecting these numbers out a couple years is one of your best friends and will help you find good investments like Prosus. So we have net income. If things continue as they are, we see steady growth there, which will explosively grow in 2022 when their investments come to fruition. So what we want to look at here is cash flow from operations, right? So right now, as you can see, the numbers between brackets are negative. 2018, they operated at a loss of 279 million. That became 145 million loss in 2019. A $46 million loss in 2020. Now, if you see these three numbers, you hear that. It goes down at that rate, right? You're smiling. This is good information. Looking at a positive number for 2021 of 50 million from operations, and then 365 million from operations in 2022. And that's because these investments, right, they start expensive, and as they start to generate money, their expenses go down, and you just get more and more money. So these are going to be stacking up on themselves. Capital expenditures, nothing too fancy there. We want to look at cash that might be stuck, but no amount of cash here is too stuck for it to matter. Cash flow from investing, no crazy anomalies here. No investments announced for 21-22, so we're keeping those at 0. But even if the numbers here would change, it's okay. I don't see any crazy surprises from the cash flow from investing. And now we're looking at total cash flow. Net changes to cash. Important. Of course, what you want is you want to be able to continue their activities without having debt strangle them. That's why you were crying. Well, instead of just crying, this is at Jerry, just tell me to move the camera. You want to make sure that they have enough cash to sustain the growth that they're having, because debt can strangle you even if you're profitable, which they do, so they're fine there. We're looking at changes in net debt, which are going down. In fact, they're owed money in 2022. And yeah, so that is the cash flow statement, and we'll be looking at the yield from that statement in a second, because these numbers are not relative to ownership, right? These are just their flat numbers. So what you're not taking into account here is stock ownership, and those are very important numbers to correlate to each other. And we're going to do that together in just a sec. Balance. So you can learn quite a lot from the balance sheet. I think one of the most important things to take away from the balance sheet is that they have healthy assets that don't depreciate too fast. If you have a company that sells printers, I don't know, and they manufacture printers, and these manufacturing machines only live for 5 years, and they're Buildings are losing value, and they're on an industrial area that's falling out of favor. You're seeing a lot of assets that are depreciating, and that's an unhealthy balance sheet. In tech, the cool thing about tech is oftentimes they don't have such an unhealthy balance sheet because most of their things don't depreciate so fast. They often appreciate. Looking at Apple, looking at semiconductors, those kind of companies have very healthy balance sheets. Looking at other industries like automotive and such, you start to see a few more holes. Airliners is another one. Now, this is a very healthy looking balance sheet. The receivables are low, which is good. Their cash is fine, as you can see. Total assets are growing, also very important. Long-term debt, it's fine, it's not hurting anybody. Liabilities, fine. And you see here the total equity is growing. So what we're seeing here is a company with a very healthy balance sheet that can take a hit while at the same time generating a tremendous amount of cash. So I was talking about the dividend yield or the cash flow yield a second ago. What that falls under, in my opinion, is the business performance. So how does the business perform? And one thing to note is they made these expensive investments 5 years ago, right? So those investments start to slowly pay themselves off. And what we need to look for isn't a positive number today. What we need to look for, obviously it's important to, if we have them available, why not? But what we want to look for is for those percentages to get healthier and healthier and healthier at a steady pace. I want to be able to see on the horizon, when is this stock turning, or when are these investments turning profitable? And as you can see here, the return on capital, 2018 minus 1.5%, 2019 minus half a percent, 2020 minus 0.38. We've seen a few more investments in 2021, but I'm expecting in 2022 for the return on capital to start turning positive, and you'll be seeing that back in the cash flow as well. So return on equity. So how did they do with your investments, right? How do they do with your equity? Fine. Operating margins are becoming smaller, which is what you want. And free cash flow, as you can see, we started at a loss of 417, which is what I was just talking about, in 2018. And then if you look at 2020, 148, and 2022, I'm expecting it to be up 250. Valuations. So what we're looking at here, and these are valuations you often hear from people on the Discord, and I think they make the mistake of starting here. They're like, oh, this stock's at a PE of, this stock has a dividend yield of. What's important is to understand what's behind these numbers, right? So we just saw what's behind these numbers, and now we're going to draw conclusions from them. So this stock trades at a PE of 43 in 2020. I'm expecting that to stay around the 40s, but we're going to see that number very quickly half towards the end of 2021. Maybe 30s, low 30s, and by 2022, in March, I'm expecting it to be around 24 times PE. Dividend yield, right now they're not paying out any dividends. They are doing share buybacks, however. And one of my favorite numbers, the free cash flow yield. So free cash flow, obviously, much harder to lie on than your income statement. These numbers are far more real with you. So 2018, obviously, they made a lot of investments. 2019, these investments are starting to pay off. 2020, same thing. And as you can see, this yield is becoming a smaller and smaller number before turning positive in 2022. What does the free cash flow yield mean? This is your free cash flow divided by your outstanding stock. And the reason why you want to know this number is if a company isn't doing a positive or working towards a positive free cash flow yield within the foreseeable future, every dollar put into this company isn't generating more dollars, right? And that's a problem. If this would be a number that's been going down, you're seeing free cash flow yields in the companies of -3, -5, -9. That means roughly they are, for every dollar invested, they are losing year on year 4 to 5%. And if it turns positive, that means for every dollar invested, that number goes up. So finally, what I wanted to show you guys is my SOTP valuation. So that is looking at every individual part of process and giving them a value. Before I do that, Samuel, where's the best place to find these accountings write-ups? Good question. The place to find them is on the investor relations page of the company itself. That's where you find the most accurate information. I myself often also look at analyst reports that I get, so they often have their financial statements already projected out a couple years. So I compare those numbers to my own. So those are the two places I look. You can kind of cut corners. You can look at Bloomberg or Yahoo Finance, but often those numbers aren't quite correct. So my biggest advice, if you're getting these numbers, get them from the investor relations page of the company you're trying to analyze. Or you can look at their reportings that they send to the government if they're a US listed stock. Are there any other questions?
What does SOTP stand for?
SOTP stands for sum of the parts. Sum as in SUM.
Mm-hmm.
Okay. So we're looking at the parts that make up process, and we're giving them all a valuation. So I'm not going to jump into every single one of these valuations, but what we're looking at here is what's the value of each part of process. And as you can see, Tencent has a dominant partnership in that value. But that gives us, at the end of the day, in US dollars, a fair valuation of about 190.7 million. And if we're looking at per share, what that gives us is 108 right now. So right now, I think the fair valuation of process is $108, which is pretty much in line with their stock price. Extending that out towards next year, I think that value is going to go up pretty tremendously as these investments start to pay off. OLX, for example, is a big real estate investor for vertical real estate. iFood is food delivery, and there's a couple other examples that are available. Over here, I put down my methodology. And that's the end of this part of the presentation. So allow me to quickly set it up on an intermission. Okay. So, questions. We just discussed the fundamentals. Yeah, their ADR. Let me actually grab my own documentation here and take a quick look. Yeah, my valuation includes the ADR, which sits at about 1.4. Yeah, or 1 to 4. Any other questions? Also, I should probably look at my Twitch chat. All right, without further questions, a little conclusion on them. Oh, there's another one there. Oh, hey, Teres. We also be doing a recap for the crypto market for 2021. Sikro, holy shit, now I haven't spoken to you in a while. I will be probably not be doing that, mostly because I'm not a big fan of crypto. I have a 1% of my cash position is in crypto, and that's mostly just gambling money that I'm seeing what happens. I don't particularly believe in crypto, so I don't think crypto is going to be something I'll be paying that much attention to this year. I wanted to kind of get into a conclusion-ish area for Proces. So expected to be about a 47% upside of 2021. I think it'll be the best performer on the Amsterdam Stock Exchange. Obviously, I'm a young investor. I'm not that experienced, so I could be wrong, but I'm expecting it to at least be a very good investment for this year. You do need to be patient. It's not something that will moon overnight. It's not one of those exciting, GME up 100% in X amount of time. This is a stock that will just steadily climb for solid reasons that is going to get more and more attention, and in doing so, it's going to be valued higher and higher and higher. And I think projecting it out towards 2025, 2030, we're going to see times 3, times 4 on this company, which is a very good performance for me. It's well above my portfolio goals. So in that sense, this is something that I'm going to have as a passive part of my portfolio for a long time. And would I recommend this to you? Well, obligatory. I'm not a financial advisor. This isn't financial advice. This is just me looking at a stock and discussing it with you guys, and for informational and entertainment purposes only. If you do decide to invest in this stock, you need to believe that tech still has very much a place in this world in the next 4 to 5 years. You need to believe that emerging markets like Brazil and China is going to have an increasing GDP over the coming 5 years. And you need to believe that Proces's leadership can continue to make smart investment decisions and not blow money on useless investments. Which I think, again, them having this cash laying around, instead of burning it on some silly investment that is super expensive right now, them doing share buybacks is one of the best things they could do with that money. I, as an investor, I'm very happy with that. Investor-friendly stances from companies is something that's often undervalued, and I think it's very worth looking into if a company is investor-friendly or not. A company that sells shares into, eager buyers that believe into the company might not be the company you want to put your money in. Whereas a company like this, who hasn't been paying dividend for a while, now that they have cash, saying, okay, let's repay some of these investors, that's excellent. And I think, where can you buy that sweater? You can buy it on the AEX website, which is the Amsterdam Soccer Club, their website. I think this was a limited edition, so I think you're out of luck. But it's fantastic. It's very comfy. All right. Well, thanks everyone for watching. I might be playing some games tonight, so if you want to join in, just shoot the shit, talk a bit, chat. Feel free to hop in then. You're very welcome, Kevin. Thank you all so much for watching. If you want to watch more, give me a follow. Also, hit up the SMLC Discord, Stock Market Live Chat Discord. Shout out, I'm spending most of my time there and doing most of my analysis on there, so you can see what's up over there. Thank you guys so much, and have a great evening.